right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Bitcoin is dumping. I personally was expecting this. I was expecting to get maybe a little bit higher, but we were expecting a corrective move to make a lower high before seeing a dump come in, and it looks like that dump is starting today. So welcome in, everybody. Yeshwant, much love to you. R Pink, thank you so much for being here. Thank you for modding as always and doing such a fantastic job of it. Yes, please hit the like buttons, guys. If you get any sort of insight into the market from this live stream, please hit the like button for me. Please share the live stream with anyone you think might find it interesting. Dad87, thank you so much for your support, man. Thank you for the kind comments as always. Good to see you in here. Ryan Henson, welcome in. Lil Rich, welcome in. Teen B Willa and Darksby, welcome in, everybody. Colin Dresser, it is another beautiful day trading in the hood. That's for sure. Chichan, welcome in, man. Thank you for the kind comment. Thank you for being here. Michael Mitzal, good evening to you. And Jesus Save 77, God bless you. Thank you so much for being here. Tony CC as well, and Ryzen JI69. So guys, over this week, I've been talking about how this move to the downside from 76K looked to be more impulsive. With that wave 1, 2, 3, we got our running flat and a 4 and then a 5. So we knew that this was impulsive or it was more probable to be an impulsive move to the downside. And because this move down was more probable to be an impulsive move to the downside, we were looking for a 3-wave corrective move to make a lower high before dumping and taking those lows and really potentially dumping extremely hard here in the next coming weeks. We could see a very, very aggressive dump come in. Once again, we're looking at this entire range over the last 6 weeks, very similar to our prior range where you had that kind of 3-wave corrective move before dumping extremely hard. We were looking a little bit more messy in here, but that kind of 3-wave corrective move up before potentially dumping to make new macro lows. And so because we started the dump down with an impulse, it was more likely we were going to make a lower high and then continue lower, continue the overall bearish market structure. Now that we had broken back inside of our volume profile, first off, anytime you try to break out of a volume profile, you fail while rejecting from a resistance. And remember, that was our 0.5 Fibonacci right up here, along with our anchored VWAP on Bybit. And that was the last hope for the bears. We really needed to reject this area if we were going to reject and see potentially sub 60K in the next coming weeks. But we did do that. We rejected and we did fall down with a pretty aggressive move to the downside. And so we tried to break out the last few days. We tried to break out of the value area high now that we had fallen back inside of our volume profile. So fell back inside, fell to the POC, back tested value area high, rejected, and then you've made new lows. Now at the time, this low here, well, this low here is the coin Bybit POC at around $68,000. But this entire move up, we were looking at this 3-wave corrective move and expecting, I was expecting to come a little bit higher. I would have liked to come to the golden pocket. The golden pocket had a lot of confluence there. But we've been watching a couple pitchforks, and we've been watching a couple, the bearish pitchforks and our local bullish pitchfork. So this is your local bullish pitchfork. Remember, we took this long on Tuesday, bouncing from the bottom of the pitchfork band and the POC. It was also a golden pocket. And our target for that was to at least just take out the high, the high of the W wave. And we did that. And the most bearish scenario is that you take out that high and then you dump immediately. The other scenario was you could come a little bit higher up to golden pocket or even up to that $74,200 naked weekly point of control. But overall, we were expecting a lower high before dumping. After taking the liquidity yesterday, we fell back inside the range. We back tested that value area high bearishly. And upon that rejection, you expect to at least take out these local lows in here. We are dropping pretty aggressively here. You can see we are losing the pitchfork band, tried to hold it as support, overnight here, came down to the bottom, which was also our 1.618 Fibonacci extinction. I'm going to get into that in just a second. This is more, that's going to be more local TA of what's happening here. But we saw only a small bounce this morning around New York Open from that area, and now we're rejecting. And also we had that 70K support, which was our local golden pocket in Confluence with a naked daily point of control. It pretty much got busted right through. There was no reaction. I was sleeping when that happened. I told you guys yesterday in the video that if we came down there while I was sleeping, because I figured it was going to happen while I was sleeping, that I probably wasn't going to do anything at that level. But the move down we're seeing from Wednesday's high, yesterday's high, is pretty aggressive. And if we look at this, it does look impulsive. We have a wave 1 here, a wave 2 retrace here, and I would have to say all of this is a wave 3. Now, if this was just going to be a corrective move, a 3-wave corrective move before coming back up, you generally don't want to hit the 1.618 because that is the most extreme move in a C wave, is coming to that 1.618, and it generally ends on a high amount in volume, and then you get your push back up in a motive wave or an impulse. We did see a small bounce from the 1.618, but we only made a lower high and rejected. So originally this morning I was thinking, okay, maybe are we going to see a bounce from $69,000, seeing a 1, 2, 3, 4, and are we in the 5th wave now, a 5, and this would be the first leg of a much bigger impulse down that could take out 60K, right? So we would be looking at a bigger, let me just zoom out onto our 6-hour chart. And we'd be looking at this entire move down over the past 24 hours is just our first leg of a larger impulse that could bring us to 58, 57K, right? We're looking for that big move down over the next 3 weeks or so. But if we zoom in and look at our local TA, this local move down we've been seeing over the past 24 hours, I have to say that I am not classifying that bounce, that small bounce we had at the 1.618 as our wave 4. First of all, it is shorter in time than your wave 2. It is smaller in price than your wave 2. And the big thing to look at here, let me go ahead and turn off this pitchfork now for a second. The big thing to look at here is the volume, because in your third wave, your volume usually increases as that third wave is developing. You want to see a steady increase in volume. And if we turn on, and then after seeing a wave 4, your wave 5 ends on a lower amount in volume. So let's put that theory into play. Volume is still increasing actually after rejecting on that little push up from the 1.618. Volume is still increasing. And if this was our wave 4 here, and this is our wave 5 here, you'd want to see volume decreasing. We are still seeing volume increase as we are dumping here, as we are dumping through the 1.618. So I'm looking now at this being a wave 1, a wave 2. Wave 3 could bring us down to our a support confluence we have around 68,000 to about 67,800. And that is going to be our 2.618 Fibonacci extinction level. So pulling it from yesterday's highs to those first lows to the lower high that we made, our 2.618 Fibonacci extinction is around the daily level. And then if we pull a trend base, or excuse me, a Fibonacci retracement from the lows that we made on the weekend, remember weekend lows all the way, by the way, guys, weekend lows do not stay intact long. Weekend highs do not stay intact long. If we pull a fib from that low to yesterday's high, our 886 Fibonacci, which does bounce you in sideways ranges. And this range we've been in for the last 6 weeks is pretty sideways range. But in particular, this price action here is very sideways. So we do need to pay attention to that 886 Fibonacci. So we do have a zone of confluence coming up where we could see a wave 4 bounce, right? This zone here is where I'm looking for a scalp long opportunity and an aggressive scalp long with aggressive take profits, because this thing could start dumping pretty aggressively over the next few weeks. So if we do continue down, continue to bleed down in the next couple hours, developing some bull divs on the chart, we bounce from that area, that could be the end of the wave 3. Then we would be expecting a retracement in a wave 4 to make a lower high And remember, those wave 4 targets are between the 382 Fibonacci and the 0.5 Fibonacci. So we'll throw a theoretical Fibonacci retracement on for those wave 4 targets, and I'm just putting the low at the daily level. You can see that we would only be expecting a bounce up to like 69,250 to maybe 69,700-ish in that general area. And you're going to have an order block in there as well because of this move up. So a wave 4 retrace before seeing another dump in a wave 5. And by the way, even after all of this happens, this could just be a wave 1 of a much bigger impulse to take out our 60K lows. We really have to pay attention to this now, and I've been saying all week this is my primary scenario, not the bullish scenario, but the bearish scenario has been my primary scenario based off of this first rejection we got being highly more probable to be an impulsive wave to the downside. And now we can look at where would our third wave end. We did a little bit of theoretical Fibonacci pulling yesterday in the video based off of coming up to the golden pocket, but we didn't come up to the golden pocket. So if we now take our, let me zoom out to the 4-hour time frame. If we now take our trend-based Fibonacci extinction, and I'm just going to hide this WXY, and we go from the highs at 76K to our lows that we made around 67.3 up to our lower high that we made yesterday. And we put on those 1.618 Fibonacci extinction targets. Where is our low of the potential big third wave? This is the daily time frame impulse to the downside. This is a high time frame impulse to the downside. Where would we expect that low to be coming in? Below our 60K lows. So would it make sense that now over the next few weeks, this could get very aggressive? Wave 1 maybe is going to bring us to 66,000. We get a bounce up to golden pocket for wave 2. Wave 3, 4, 5, you know, maybe something like this coming down. And that is all going to be part of your third wave, right? And we would be looking at, actually, yeah, this would be your third wave of the third wave. This would be your 5 waves of the third wave. But we would be looking at a bigger impulse with this being a wave 1, our highs yesterday being a wave 2, our wave 3 could bring us down to 59,000 before seeing a wave 4 retracement and then a wave 5 coming down there. Either way, what we're looking for is we're looking for impulsive moves to the downside followed by corrective moves to the upside. So we're just starting to the dump today. This dump could continue to get pretty aggressive. You can see money flow does not look the best on Market Cipher B or NAMI. And we are printing on the daily time frame a bearish engulfing candle, which is a very bad sign. A bearish engulfing candle completely engulfing yesterday's green candle. And if we close with a nice big bearish engulfing candle, we get a red dot on Market Cipher or on NAMI. That could signal that more downside is to come. We're also rejecting from the value area high of the range. After attempting to break it for 3 days in a row, we failed. So, and we're losing the POC, at least on Coinbase, we're losing the POC of the range. So it's likely that we dropped at least to the value area low of the range. Now, at the value area low, we do have a pretty nice confluence of support there. I will say that. I am expecting a bounce. So if we're looking at this being a wave 1, a wave 2, and then we're in the third wave, right? The third wave could bring us down to $59,000. But within this third wave, you're expecting a 5-wave move within itself, right? You're expecting this to come in here, a 5-wave move within itself. And I should have extended that a little bit, but you guys get the idea. Let me just do this. 1, 2, and we'll turn on our lines for that. Right? That would be your third wave of the bigger dump. You'd be expecting that zigzag pattern down, and then a 4 and then a 5. So could we dump straight to $66,000 and take out the low from Monday? Yes, we could. Actually, I think it's kind of probable. I am looking at some local levels for support based off of our local market structure on the 1 hour time frame. On the 1 hour time frame, we could see a very small bounce from 67 850-ish, where our daily level's at, where our 786 or 886 is at, and where our 2.618 Fibonacci extinction's at. But we're looking for this to get pretty aggressive, right? So if this is just our first 1, 2, 3, 4, and then we come down to 66,000 in a wave 5, that is only your first leg of the much bigger dump to the downside. But from 66,000, we would be expecting a retracement up to wherever the golden pocket pulled from the high of this move to the low of this move is. So you still could get a decent day trade long position from $66,000. I will be looking for longs there, especially if we have bull divs coming down to that support. But I will be looking for longs, looking to take profit at a lower high, get completely out of it, and flip heavily short in here, depending on how we move up. So, sorry, I should clarify, depending on how we move up. If we move up in a motive wave, then you definitely don't want to be looking to flip heavily short yet. But that data we just don't have yet. So now we're just going to be monitoring the local price action here, seeing what happens locally. And for me, the volume is continuing to rise within this dump to the downside. So it does look impulsive to me. From yesterday's high, we have 1, 2, and we're in the third wave right now. It is really hard to see a macro bullish scenario, guys. I know a lot of highly respected traders that I love are looking for $86,000 plus, you know, $86,000, $78,000, a bunch of different, much higher targets. But to me, first of all, we have to realize we're in a bear market. We have high time frame bear divs. We have high time frame monthly bear divs, weekly bear divs, and we had daily bear divs up at the top. Every range that we form, you should be looking for that range overall, especially if it looks corrective, to be breaking down, because we're in a bear market. So if we're in this range and we kind of see this overall zigzag correction to the upside, yes, it got messy in here with all these chops in that last move to the upside, but we are rejecting from key volume resistances and key Fibonacci resistances and starting with impulses to the downside. So to me, my bias is that we do have to be a little bit more bearish. At least that's my opinion personally. And I do not think, even if we bounce from 66K, I know a lot of people are looking for 66K to bounce, hold us, and then go all the way up, you know, to 85K. I just don't see it. It does, as far as structure goes, as far as Elliott wave theory goes, it is very hard to count something where we make a higher low here and then just blast off. Is it impossible? No. First of all, we know nothing is impossible in the markets, and we do know macroeconomics does have an effect, and macro geopolitics has an effect on what happens in the market. But I just have to say, the way things are playing out right now, I was expecting this. I was expecting a rejection from a lower high, and I was expecting ultimately for us to come down and take out our 60K lows sooner rather than later. Let me check the chat here. Welcome in, everybody. Thank you so much for being here. Hope you guys are all doing well in your trading. Unfortunately, our local $70,000 support didn't hold. That kind of was the bullish scenario we were looking at yesterday. Let me hide this. So yesterday we were looking at the potential of, you know, a wave 1, a wave 2, another wave 1. And if we came down to that 70K golden pocket, it would be a secondary wave 2. Then you could bust up in a wave 3 and then see your 4.5s coming up to maybe $78,000 before seeing a pullback and then continuation up to 85. Every time the bulls have really had a chance, they had a chance to break out here and continue pushing up. We didn't see it. And if the bulls were going to push up there, we needed to see, you know, a 1, 2, 1, 2. You needed to see continuation here. We didn't see it. By the way, there was a lot of problems with that count of a double 1, 2 that I just laid out, because this here, it's very hard to count a 5-wave move that doesn't invalidate Elliott waves, because you have the highs of your wave 1 and the lows of your wave 4 overlapping. So you can't say that that is a 1, 2, 3, 4, 5. You cannot say that. unless you're calling it some sort of contracting diagonal in there. But either way, it's very hard to look at bullish counts here. And now that we're falling, let's not even talk in terms of Elliott waves. Let's just talk in terms of volume profile trading. And we know that the most important things in the market are liquidity and volume levels, right? Volume support levels, volume gaps, liquidity. These things are what really drives the price in Bitcoin and drives where the day-to-day levels and bounces come in, ebbs and flows of the market. And the anchored VWAPs, you know, anchored VWAPs are like a trend volume resistance, right? Because it's the average weighted volume weighted average price. So it's the average price, but it's weighted based off of the volume rather than the prices of the candles. So when you have key anchored VWAPs that get rejected, or they even get a little bit of a fake out above it, but then you fall underneath it, that failed auction, it's called the failed auction. When you see a failed auction breakout of a trend volume resistance, that is a bad thing. Not only did we see the failed auction break down, or, you know, break out and then break down, we fell back inside of our volume profile. And anytime you attempt to break out of a volume profile, you fail by rejecting from a local resistance and you fall back in, you're likely to fill it at least to the bottom to come to that undervalued zone. And that's what happened a couple weeks ago. Well, this time we attempted another breakout. We failed, rejecting from the next resistance up pretty much, which was the Bybit anchored VWAP along with that 0.5 Fibonacci. And we fell back inside of it. We even backtested it bearishly. And after backtesting bearishly, we made new local low, which you expected. Then we backtested it for the last 3 days in a zigzag corrective pattern. We're rejecting here, guys. So because we're rejecting on a second, third, fourth bearish backtest of the value area high, we are expecting to fill this volume profile. We are expecting to dump down to fill this volume profile. And luckily, we do have some really nice support at the lows of the volume profile. So I do like a bounce in here. A day trade bounce. Now at 67,850, which we're coming up to like maybe during this stream, I will be looking for a very small scalp long. And let me be clear on that. I will be taking aggressive profits as soon as we start hitting the 382 or the 0.5 Fibonacci. And it's probably going to be around where your VWAP is for today. That'll be a super small scalp long trade. But a bigger day trade long would be looking to come down in a wave one here, 2, 3, 4, 5, and then overall this would be your third wave, right? So we could get a significant level, a significant multi-$1,000 bounce from $66,000. And what I would be looking at $66,000, we have a lot of support. So I think I don't know why I don't have this labeled in here, but we have our golden pocket. So actually, let me show you guys the levels, then I'll mark it out. So if we look at from our $60,000 lows up to our $76,000 highs, golden pocket of the entire range is coming in right at the value area low of the range. So we have our important volume support being the value area low. We have our important Fibonacci support being the golden pocket. We have a weekly level of support coming in at that 65, like 8, let's say 65,770, 65,8. We have an important daily level coming in at that pretty much that same box of Confluence of support. And there was one more thing. Let's see. Was it a naked daily point of control? No, naked weekly. It maybe a pitchfork level as well. But a lot of Confluence in this box for some sort of bounce. So I will be looking for longs, even though my macro bias is down. I am still a trader, and I still will trade the ebbs and flows of the market if the opportunity presents itself with proper confirmation levels. But yeah, dumpage is happening. A little bit of uncertainty. I know that Clarity Act was like delayed. So some news that kind of helped with this catalyst. Also the geopolitical things going on in the world right now. I don't want to use certain words because I don't want YouTube to shadow ban me. But there's things that are bearish catalysts for the market, let's say. A lot of fear in the market as well. Okay, let me check the chat here. Tony, thank you for being here, man. Appreciate the comment. And Crypto Wander One, Crypto Clown World, welcoming you guys. Appreciate you being here. I just accidentally blocked someone in the chat. IDK ho, my phone got wet and glitched out. Uh-oh. Well, hopefully you can figure that out and unblock them if you didn't mean to. Samuel, welcome in, my friend. Thank you so much for being here. Yes, please sub to the channel, guys. If you haven't subscribed, if you haven't liked, please like and subscribe. And Samuel, thank you so much for modding for me. Thank you for being here, as always. Yes, I was eagerly to wait the short at the golden pocket. Yeah, Ryzen JI69, I really did want to come up to that golden pocket. We had a very nice level, and really since losing the Coinbase anchored VWAP, we didn't backtest it. And to see a 3-wave move up here to backtest it would have been perfect. And then the dump. Unfortunately, we just got the liquidity grab and then the dump, right? So that's okay. I mean, we couldn't break out of the value area high. I was looking for a fake out of the value area high into that golden pocket and then the dump, you know. Unfortunately, we didn't get it, but we also knew, you know, I longed this low on Monday and I took 50% profit as soon as we broke that high. And then overnight, I got stopped out on the rest of it. And my stop, I set actually a little bit above break even because I figured if we're breaking the 786 Fibonacci, it's going to take the low. And so I did get a decent win off that Monday or Tuesday long that we took. At the same time, I still am in the short from up in this area and 90% out of that short position, but I'm still out of that short position. Now, I was planning to compound it a whole lot at the golden pocket. I didn't quite get the compound I wanted. So now I'm going to have to be patient and wait for this lower high. I'll compound it here, and then I'll be looking to take it, you know, pretty aggressively to the downside. Yesterday in the video, by the way, guys, if you didn't watch yesterday's video, I warned that we were likely to dump from this area. We were right in here as I was making the video. And if you go back and watch yesterday's video, we were making bearish CVD divergences yesterday in this area. So if I go to our chart and we look at this area right in here, now it was not bearish CVD absorption. Remember, absorption means that your open interest is increasing. But we were seeing lower highs on the price action throughout all of yesterday. Lower highs on the price action. We were seeing significant higher highs on the CVD. Very aggressive bearish CVD divergences. And now what's happening? Dumpage. We did not take out those highs. We did not break any of this liquidity trail, and we're dumping, and we're staying pretty aggressively dumping to the downside. So I warned you guys that this was likely to occur. Even though that it was on a decrease in open interest, it was still a warning sign that we could see that dumpage continue. Now, what I will say here, from when pretty much that bearish absorption stopped, or bearish, not absorption, that bearish CVD divergence, you know, kind of coming to this area in here, and then we started the aggressive dump from here. Well, you can see, first off, we started with a lot of shorts coming in. I guess not shorts coming in. I wouldn't say a lot, but you can see open interest was increasing here, and it was primarily shorts that were coming in. So people seeing the bearish CVD divergences, shorting, knowing that their dump was a possibility. So it did start out, this dump did start out relatively healthy. And then we got some longs coming in afterwards, right? You can see after the dumps started coming in, you see some longs coming in. They were fresh long positions for the most part. What happens? You start dumping, you start stopping out all those longs, you get your dump in open interest because they just got wrecked, liquidated, wrecked. Then we see, once again, at the 70K zone of support, which I was asleep last night, but this was a zone of support with a naked daily point of control in the golden pocket. Fresh longs coming in, and aggressively this time as well. Very aggressively, longs coming in. Wasn't able to really break trend, stump hard. What happens again? Those longs get stopped out, they get wrecked. Another dump in open interest. And then we see some longs coming in again. Fresh longs coming in again. What happens? You start to dump. Actually, we saw, I mean, it was a mixture of longs and then some shorts as well. For the most part, this was largely sideways and up. So I would say the longs were a little bit more in this area, but you can see it was fresh longs for the most part. All of this sideways price action from this general area, we saw a lot of longs coming in, and they were fresh long positions. Well, once we saw that bounce right here was from the 1.618. A lot of people were expecting a wave 4 retracement. That's when you saw a lot of aggressive longs coming in. Really is when you started bouncing there. You saw those longs coming in aggressively. But then when you rejected and lost it, you saw another big dump in open interest. All those longs get stopped out. And we just keep seeing the same pattern throughout the day. We keep seeing scalpers try to long every little consolidation, long every little consolidation, long every little consolidation. Maybe we're going to see it right now. Actually, we are seeing it right now. And is it just going to continue to roll over, making lower highs and lower lows and continuing to dump here? Until we see, for me guys now, until we're actually hitting a support level, like I understand trying to long at 70K because it was a naked daily point of control in a golden pocket. But if you're longing in here, there's not really any support in here. So yeah, sure, you might be consolidating a little bit, but there's not really any big support levels. Like the next big support level was the SFP of the low here. So, you know, we didn't even really get a reaction on that SFP. That was this morning around New York Open. And then for me, I'm not longing anything. Look at, there was a big fair value gap in here. Actually, it was all in here. It was somewhat filled by this price action, but quick move up, quick move down. And so for me, the next level I'm even remotely interested in is that 67,850-ish level where we have that daily level. It's a daily level. It's a 886 and it's our 2.618 Fibonacci extinction. So sure, you know, we have people aggressively trying to long every little hourly green candle in here, but you don't have real confirmation. Like, yes, we are developing some bull divs. As we're now starting to chop down here, you can see bull divs are starting to develop, but your money flow was looking very, very aggressive into the red. And no matter how many drives of bull div you have, until that money flow starts to bottom, which now it is starting to bottom, you're not expecting those bull divs to play out. Now, what I will say here is we are getting close to our support of 67,850. We do have bull divs on the chart. Money flow on the 15-minute is finally starting to bottom out and round up a little bit. And on NAMI, we have local bull divs on the 15-minute. We have regional bull divs on the 15-minute. And we have money flow bull divs on the 15-minute. So if we do continue to grind down into this support zone, we actually do have enough confirmation to look for a scalp long opportunity. And let me be clear, scalp long, right? We are not looking to take this up. Maybe you can leave some open, but for me, I will be taking 75% TP as soon as we hit that 382, or as soon as, if we bust through the 382, as soon as we hit that 0.5 Fibonacci. So yeah, we are developing some bull divs now. We do see a nice, like, kind of channel-y structure in this, this move down today. You can see we kind of been channeling. Let me fix this. Let's go right here. So you can see the kind of channel structure we've been in for most of the day, just kind of grinding sideways and down, sideways and down. And I'm looking, you know, let's see, we did bounce from 67,123, or 68,123 just a few minutes ago, maybe an hour ago or so. But I really am expecting us to continue lower. But at least now we're starting to see volume decline on the new lows. So that's somewhat good. Can you just dump BTC to 60K? Rebeth, if I could, I would, man. Actually, I don't know. You know, like, I'm looking to just trade the levels, guys. As traders, this is the beautiful thing as traders. Even though I'm more macro bearish to take out those 60K lows, looking for longs at support levels. Just as a trader, you have to know when to not be greedy and when to be greedy, guys. Like this long that I'm going to take at, potentially take at 67,850, it is going to be a small 1% move up, take profit, get out. The $66,000 one could be a day trade for a few days, and that might give us, you know, a move up. We can actually speculate on where that move could go up to. So if we're looking at, let me get to the 1 hour chart. Let me get rid of this channel for a second. if we're looking at pulling a Fibonacci from the highs of this 3-wave corrective move that we saw to the lows, and I'm just going to put the low, I'm going to put it right on the weekly level. It's in the middle of the box. I'm just going to put it right there. So from this low, we could be looking to target the golden pocket around 70K, right? So that would be a really nice risk to reward ratio long from this low, because we'd be expecting something like this: 1, 2, 3, 4, 5. Maybe your 3 is even going to continue a little bit more, because if all of this is your wave 1, that wave 1, it would be nice if we came down to 66,000 for the wave 1. Then you get the wave 2 retrace up to golden pocket before seeing that very explosive wave 3. Wave 4, wave 5, right? Something like that. Okay, let me catch up in the chat here. Realizing there's also a range POC in the 886 and naked daily of the Bybit inverse perpetuals. Okay, so at the 886, yes, if we look at, well, let's look at the Bybit USD chart here. And if you look at that volume profile, let me just grab that and pull that all the way. And I'm just going to hide some of these Elliott wave structures. You can see the POC of the range is about 67,950. So instead of 67,850, it's 67,950. But it's generally that area, 68K to like 67,850. And then if we pull that 886, let me make that a different color so you guys can see it better. Yeah, 886 is there as well. And then let me just hide that. And then if we go to our daily chart and we throw on that daily level, I mean, now we're starting to really see some confluence coming up locally. So why would you, guys, once we lost 70K, there's 3 levels to look at internally. The 70K had a naked daily point of control and a golden pocket. The next level to look for, always in ranges, is liquidity grabs. So the liquidity grab of Tuesday's low. But we didn't get that. So the next level, if you lose this and you don't start SFPing it, I'm not interested in anything until we get down here. We've been seeing people long all day long, and they just keep getting wrecked over and over because they're longing in the middle of the nowhere zone. Like, if there's no support there, why are you longing there? Even if you see bull divs, that's FOMO kicking in. We have to be patient as traders and wait for our levels. You set the trap. You wait for the market to come to you. If you have confirmations, you take it. If not, you sit on your hands and continue to wait. So we have not quite hit the POC yet on Bybit, but you can see the zone that we're looking at. It's a pretty clear zone. I mean, it's this zone right in here. And then our 2.618 Fibonacci extinction. If we pull our trend-based Fibonacci extinction from yesterday's highs to that first initial low yesterday to the lower high, and then we look at our 2.618. And let me just turn off the 1.618. Right in that zone. So very, very clear, nice, concise confluence there. And yes, I get it. We're seeing a little bit of a bounce right now, guys. Look at earlier today. You saw 2 green candles, a little bit of bounce. Everyone thinks you're going to Valhalla, to the moon. And then you just roll over. Here, seeing a little bit of a bounce right now. I don't care. Even if we do this, I'll miss it. I'm not, as traders, you wait for the levels to be hit. If you're front running levels, sure, you might win some of them, but it's a bad practice as a trader. Long-term success, it's a bad practice. What I will say, let's go into our order flow right now. Let's look at the order flow that we're seeing. It looks like a lot of new long positions are stepping in. Let me get this. Yeah, new long positions stepping in right now. But the thing is, you're not at support yet. This could be another reason for a squeeze, one last little dump. Look at, you get the sideways price action, fresh longs coming in, then you dump, you flush them out. We saw it all day. New long positions coming in here because you got a couple green candles, new long positions. You dump, you flush them out. So we're seeing the same pattern repeat itself. New long positions, dump, flush them out, dump, flush them out, dump, flush them out. It's like the market makers are having a field day with retail right now that's trying to long every little green candle. So for me, I mean, like, okay, cool. I'm not participating in that. We are seeing some longs step in right now. Open interest increasing, CVD increasing. It is fresh long positions from our low that we made about an hour and a half ago. I expect this to roll over and at least hit that 68K. Okay. Let's see. What was, bro? Did you already check the liquidity above? The liquid above? I did not look at the liquidity yet. Are you talking about very locally? I mean, yes, we do have liquidity above. Now it's above $70,000, which is where. Remember, guys, yesterday, if you watched yesterday's video, 70,000, and I also pointed out to Jason on his live stream. But if we were looking at yesterday, we were still up in this general area. So if we were going to make a higher low and continue up to the golden pocket, which was at like 73.2, we needed to hold a higher low. And so if we looked at the golden pocket, it was at $70,000, and there was also a naked daily point of control there. And you can see that is where we did have a reaction overnight. I was sleeping when it happened, but overnight here, reaction. But a lot of people, once we started losing this, we back tested it. And actually, Jason was one of these people. Once we started losing it, he back tested it. And upon the rejection, shorted from there. And so now we have a lot of intraday short positions that shorted the loss of that golden pocket. That's why we have some liquidity above that golden pocket. But if we go to the last week of price action, all right, there we go. You can see really above the highs from yesterday, we have some liquidity. Let's go to our Model 3. Let's get a better look at this. And let me change that to symbol. Yeah, all that liquidity is resting above the highs from yesterday. And below us, we don't have, I mean, definitely more liquidity resting above us than below us. But you can see coming down to about 66,000, actually 67 in this case. But right as far as today goes, if you look here in here, liquidity gets flushed out. Now we have some liquidity below us. It's probably going to get flushed out because it's the longs that just opened. It's the longs that just opened right in here. Now have their stops below that low. All of these guys that have been longing in this zone would have their stop below that low because they're expecting to see, you know, something like this. Now, if you really want to be safe, guys, if you want to be a conservative, proper trader, you wait for a break in market structure. Even on the 5-minute, we have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Is this going to be another lower high before another lower low? If you want to wait for a proper confirmation signal, you wait until you break one of those lower highs. Once you break one of those lower highs, now it's a change in market structure, right? You break that lower high, and then if you get a pullback, you can long the pullback around the golden pocket. But you're not, you're going against the trend right now, trying to long, you're going against the trend of lower lows and lower highs, especially with volume increasing on the dump that we've seen. Look at all, as even on this Bybit chart, all the big spikes in volume are red for the most part. We're seeing volume come in on the dumps, not on the pumps. The pumps are low volume, weak retraces before dumping down. And right now I would be looking at, let's go to that 5-minute chart on TradingView. I would be looking at rejecting around our local golden pocket coming up very shortly here. It's also going to be your prior support resistance flip. Support resistance flip, right? On the 5-minute, it was support. It was support. You break it down. Now it's going to turn into resistance. So if we see this, I would expect this. And then hopefully from here, we can get actually what would be even nicer is if we did something like this. Bounce in here and then come down, because then what we could look for is as soon as you take out this high, now you're like, okay, we're in business. If you want to be a little bit more aggressive, just from seeing bull divs coming into this, you could long this from here. That's probably what I will do if I do see the bull divs on the chart. 5 minute is giving us some bull divs on Market Cipher. Actually, yeah, it's pretty nice. 1, 2, 3, 4 humps here. Money flow curving up. But you really want to be looking on like that 15 minute and like even the hourly chart. Let's look at the hourly chart. Do we see bull divs coming in here? Not really on Market Cipher, but you do on NAMI. You see slight bull divs coming in on NAMI. And money flow coming to the upside. Okay. Where was I at? At 72K. Bro, oh yeah, the liquidity at 72K. Yes, we do have that liquidity at 72K. We just looked at that. It's pretty much above yesterday's highs. We had a lot of people short the SFP yesterday. Once again, liquidity is the most important thing within ranges. You got a liquidity grab yesterday. It's in some ways, it was more of a low time frame failed auction because you have multiple wicks here. But pretty much you came above, grabbed that liquidity from this high, and then lost it. So especially in this range, remember, we saw a lot of bearish CVD divergences. We saw a lot of shorts coming in, especially upon falling back inside the volume profile. So yes, there's going to be liquidity now above those highs. But because this is looking impulsive to the downside, I don't expect that we're going to come grab them anytime soon. I would expect to drop to 66,000 before coming up to 72,000, even from where we're at right now. Now here's the thing on this, guys, on this, just intraday dump that we're seeing right now. If you break the 1.618 Fibonacci extinction, it's far more likely to be an impulse than a corrective move, right? Because in an ABC correction, in an expanded correction, you can come to the 1.618 in your C wave. But if it's a 1, 2, and you break past the 1.618, it is like, I don't know the exact probability, but 80 to 90% chance that this is impulsive because you're breaking past the 1.618. Remember, the 1.618 was right here. We're almost to the 2.618. So it's far more likely now that we're in a third wave here rather than a C wave. Seeing this as an A, B, C, we're far more likely to be in an impulse to the downside. So wherever we do bounce, corrective move up to 0.3 to 0.5 Fibonacci, you would be looking for a dump. Now, Liam, you're saying I'm not sure wave 3 is going to give us a chance to get in. This wave 3, no. You've already dumped too far. If you're shorting now, you're not using proper risk management unless you're doing super ultra low time frame scalps, very precise. And as soon as you take out the low, you're taking 50% profit. But what I would be looking for is, first off, we know that if this is likely to be an impulse, 1, 2, 3, you could short the 0.382 or the 0.5 Fibonacci, right? So if we pull that theoretical fib, it's theoretical now because we actually haven't stopped the wave 3, but I'm going to put it right on the daily. We're going to look at our wave 4 targets between 69,250 and 69,7. You could be looking for shorts. And I like that zone a lot because look at this. These 2 green candles here are going to create an order block. If we go to the 4-hour time frame, let's see, not on the 4-hour. If we go to the 2-hour time frame, you're going to see a nice order block. Look at that order block right there. And that order block is in your zone between the 382 and the 0.5. So if you're looking for the short position, you could be looking at, after coming down here and bouncing from here, first of all, I'll be looking for a scalp long from here. The scalp long with my TP completely, actually maybe not completely, maybe 85, 90% of it, I'll be taking out around the 382 to the 0.5 within this zone of resistance. And then if you wanted to get short, you look for the short on the rejection of the 382, and you're looking to at least take out the wave 3 lows, right? So if the wave 3 lows were at the daily, you're looking to come down, and I personally would be looking to come down and take out your 67,333 low. So that could be your 5-wave move, right? 1, 2, 3, 4, 5 to take out that low. That would only be your first wave of a much bigger retrace. Now, Liam, if we want to get in on the very big wave 3, the daily wave 3 to the downside, that could take out 60K. After this 5th wave low, you're looking for a 3-wave retracement up to the golden pocket. Wherever this golden pocket is coming in at. And it could be the 786, you know, between golden pocket 786, wherever there's going to be more confluence, let's say. This short right here could be the mega short that nukes you below 60K. So this is what we want to catch, Liam. And I suspect that won't be coming until next week, because even if we see a bounce later today and maybe overnight we make that wave 4 up to the 382, and then tomorrow we're kind of grinding down in the wave 5, take out this liquidity. I'm expecting that over the weekend is when we're going to see over the weekend and maybe early into next week. Let's say all of this is a wave 1 that brings us to take out this low. Your wave 2 happening over the weekend, a slow, grindy move up. And by the way, on the weekends, we have been seeing moves up. It's been weird because of what's happening geopolitically, but that slow, grindy move up that we see, that short position that could be coming in mid next week, could be the ultimate short position where we do make big bucks. That's where you want to catch those wave 3s. And I will try, Liam, if you are in the Telegram, I am going to try to let you guys know. I really want to catch this possible wave 3 dump to the downside. And of course, I want you guys to catch it as well. So I will be keeping you updated as best I can. I am going to be paying attention as much as I can over the weekend as well. Of course, weekend is family time for me. So I do like to, you know, not sit at the charts all day long, but I will try to keep you guys updated. Sir, from the 72K high, we moved down in a 3-wavy structure. Okay, so far it's a 3-wave structure. First of all, it's not done yet. We're continuing to dump here. And by the way, yes, right now it does look like a 3-wave structure, right? 1, 2, 3. Well, who's to say 3's even done? And who's to say once we bounce, it's going to make a lower high before making that 5? So here's the thing. You passed the 1.618 already. In a 3-wave corrective structure, your common target is to come between the 1-to-1 and the 1.236. Let me get rid of some of this stuff, right? So if we're looking at this being a 3-wave corrective structure, your most common target is between the 1-to-1 and the 1.236. That was way up here. We even surpassed the 1.618. We're almost to the 2.618. So it's very more probable that this is part of an impulse. Yes, right now, you're right. It looks like a 3-wave structure, but it's not done yet. And another thing, we do know that rejection from 76K to 67.3 looks, it's far more probable that this was an impulse. So after an impulse finishes, you're likely to get a 3-wave corrective move, making a lower high before seeing another impulse come in. And if the start of that impulse is a 5-wave impulse in itself, like the wave 1 of a bigger 3rd wave, I mean, that's what you should be looking at. So because this was a 1, 2, 3, 4, 5, and then after that 5, we got our corrective 3. Now we should be looking at a 1, 2, 3, 4, 5. You know, you get the idea. So yes, you are right. Right now, it looks like a 3-wave corrective move. First off, the 3rd wave just isn't really stopping. Yes, you're getting a couple hour, 2-hour candles of green, but it's not really stopping. And then we just have to wait for a break in market structure, right? Once the break in market structure occurs, we can say, hey, maybe that push down is done. Maybe. But let's see. Yeah, let's see. Hi from Romania. Oh, thank you so much. Let's see. Maris Suvandio. Thank you so much for that, Marvis Suvandio. And I'm sorry if I'm butchering your name. It's not intentional. You did help me out with that dump call. I closed the rest of my last long. Awesome, Crypto Clown World. Well, I'm glad, man. I hope you made still some good money on that long position. You know, I made some money on this long from Tuesday. I made a decent amount of money on that because when we bounced here, I was looking to take out this high, and that's exactly what happened. Now, I only took 50% take profit up here, but at least it's still a healthy move, right? It's still a healthy win. Teal House Coffee and Bakery, thank you so much for the kind comment. And welcome in. I don't know if I've ever seen you in here, but welcome to the community and thank you for the kind comment. I'm live, by the way. I'm live. My normal live streams are Tuesdays, Thursdays, and Fridays at 3 p.m. Eastern Standard Time. And then on Mondays and Wednesdays, I make videos around market close. Tony, let's see. Hey, Divine Hood, do you know of they had any videos for Nami? I don't think he has. False Prophet has not made any videos for Nami yet. Actually, he's talked to me in the past about making some. Man, I need to get on those, I guess. I've been so busy actually trading that I'm not making many tutorials. But yeah, I think the bottom line with Nami is like what I use these momentum and money flow indicators down here for is you want to be looking for divergences, right? Because what a divergence is, it's a slowdown. The momentum is getting higher and your price action's dumping. So that's a divergence you're seeing. And then if you look at money flow divergences as well, as you keep dumping and making new lows, money flow is making higher lows. And that is what you're looking at primarily. There's a couple other things you can look at as well, but I'll reach out to False Prophet again and ask him if he has any more coming out, any more tutorials with Nami. And it looks like you said you read an email. Okay, cool. Roy, welcome in. Quiles, welcome in. 60K will be the ultimate long, I guess. So, Robeth, I am looking at personally around 58K or 54K. The reason why, let me go to, well, first off, let's stick on this chart real quick. And let me just hide some of this local stuff we got on the chart. The reason why I'm looking at that is because this pitchfork, first off, highly, highly respected throughout most of the bull market, right? And this is a very nice, you know, reject from the lower band, flip it to support, but then fall to the bottom. You can just see how nicely it's been respected. At the top of it especially, this last year of 2025, so respected. All-time high in early 2025. Next all-time high. The low in April, perfectly bounced. You formed the distribution range at the top again at late 2025. That's our current all-time high. You drop to the lower band, you bounce, you get a bounce from 80,000 to 98,000, an $18,000 move to the upside. You break it to the downside. What are you looking for? You're looking for the next pitchfork level of support, the midline. And the midline is going to be coming in around, like now, if we dump aggressively, 57,000, right? 57.5, 57,000. But if we go to, let me just go to the Coinbase chart here, and let me clean this chart up just a second for you guys. What we're looking for is at the $57,000 to $58,000 zone. So it's like a zone, right? 57 to 58,000. Your anchored VWAP from the bear market lows. So this is your very, very key trend resistance, right? Trend support, excuse me. Support from the bear market lows. The only time we hit it, we saw an aggressive move, but we haven't tested it pretty much after the beginning of the bull market. You haven't tested it all the rest. So if you come down, that's going to be a very strong volume support level. But also if we look at our naked volume levels, let me turn on our naked monthly points of controls. Naked monthly point of control. Boom. Right there, $58,000. It's like $57,970. I have it marked out, so let me mark that out. Let me turn that on for you. $57,900, let's say, right? Naked monthly You also have liquidity right here from this low resting right into that. Let's turn on our daily levels. Oh, we have 2 daily levels right around there. 58.2, 57.350. Okay, wow. You see all of this is really starting to look real good here. Let's look at our naked weekly points of controls. Oh, there's a naked weekly point of control at 57.9. Right? I mean, like so much support in there. And then as far as our high time frame pitchforks, I just showed you one of those pitchforks, high time frame midline down in that area. If we go to our multi-cycle pitchfork, this one actually is a little bit lower. This is that $54,000 area, 55 to 54. But you can see we have a weekly at 54.8. Let's just say 54.9. And then if we look at our 2024 long range, 2024 range that was 8 months long, and then our upper range, which is our 2025 range. But because we've fallen back inside of our 2024 range, now you can combine the 2 ranges to make it one bigger range. And now you can see that the value area low of that range is coming in at the bottom of a very nice macro pitchfork, where our all-time high, we just happened to reject from the midline. You know, this at the beginning of the year was a failed auction distribution pattern above the midline. But let's just say to suffice, guys, 57,000, 57 to 58 is a major support. And then after that, 54,000. Really looking at those levels. I mean, like, we could see some really nice swing long opportunities from 58 or 54. Okay. It was me longing the whole day. Well, Michael, I'm sorry to hear that. And I hope that you were using proper risk management, by the way. And the one good long, say you got stopped out 3 or 4 times today trying to long, and you lost 1% every time. So maybe you're 4% down on the day, but you get one long position that pays you 6% over the next couple of days. You're still up overall on the week. So that's what you want to do. You want to keep your losses small and keep your wins winnier, right? So try to get into those risk to reward ratios of 3 to 1 or better. Now, remember, guys, on the risk to reward ratio, I suggest everyone checks out this risk to reward win ratio. This is off of, what's the guy's name? David Perk. I found this article. It's really, really great explaining risk to reward, but let's look at this table here. Your win rate, you can literally lose more than you win. You only win 40% of the time. That means you're losing 60% of the time. If you're using trades that have a 1 to 3 risk to reward ratio, you're still profitable. You're even still profitable if you only win 30% of your trades and lose 70% of your trades. So you're winning 3 out of 10 trades, yet you're still profitable if you're using risk to reward ratios that are 1 to 3 or better. Man, some of the trades we get into on this channel and into the Telegram, this last weekend on SUI, we got into an 8.8 risk to reward ratio trade that played out in like 2 hours. It was a scalp short that I gave you guys ahead of time in the Telegram. I know some of you took it because you told me the next day on Monday. 8% up right there. Boom. You know, and a lot of our trades that we take, because we're looking for such tight stop losses, we're looking to really snipe those levels. We get in on them very, very nicely, and they're oftentimes more than 3 to 1 risk to reward ratio. And I would have to say that we're not losing 50% of our trades. I've never actually done the hard statistics on how much my win-loss percentage is. I don't care enough to do that. All I care is that the portfolio number keeps going up. But that's why risk management is so important. What are we betting on? I'm betting on I covered a lot of this throughout the stream already, but I think that Bitcoin is more likely to take out 60K before going up to 85K. And the reason why is because on the more macro time frames, this first move down that we saw last week looks more probable to be an impulsive dump to the downside. So all this week, we were looking for a lower high in a 3-wave corrective move before making a lower low. We're looking for one last impulse on the daily time frame, a 5-wave impulse on the daily time frame. 1, 2, 3, 4, 5 to come down and break your 60K lows. But we will have scalp opportunities and even day trade long opportunities within this zone, within this move down. We'll still have long opportunities. So it depends on what time frame you're talking about. It depends. Like right now, during the stream, if we can actually work our way down to that support level I just talked about of no, let's. And by the way, look at, we're starting to roll over. Just like I said, let's see if we get that dump in open interest again. Let's see if our open interest starts to dump here. Just like we've been seeing all day long, repeat the pattern. But if we do get down to 67,850, potential scalp long opportunity. Let me be very clear, scalp long opportunity. And if you're not sure, I did just cover that in depth, literally just the last 15 minutes. Okay, so we're on the right chart. If we turn on our daily levels, you can see we have a daily at 67,850-ish. If we turn on our 886 Fibonacci and our 2.618, all right here. So this zone. Let me scoot this over just a little bit. Scalp long. Because we do have some bull divs developing. We are starting to see volume decline, but I would be looking at it as a 1, 2, 3, 4, 5. And the 5 is most likely going to take out these lows, because we'd be so close to taking them out anyways. Ethereum is going to 900. Let's look at Ethereum right now. Time Attack, welcome in, my friend. So good to see you in here. Thank you for being here. TGI Thursday, Hump Day Thursday, TGI Thursday. Thank you for being here. Thank you for mod, my friend. Ethereum, guys, Ethereum has been really interesting. So I was actually kind of bullish on Ethereum when we started breaking out of this channel. So first off, just like Bitcoin, Ethereum, this looks more impulsive to the downside. Okay. Because that looks more impulsive to the downside, but Ethereum was breaking out of the value area high a lot stronger than Bitcoin was. I was looking, if we held this here, I was looking for new highs to come in. Up to 2440-ish, I think, where that golden pocket is above us. It's not on the chart, but we had a golden pocket around 2450-ish. But we fell back inside the volume profile here, right? This was the last week, holding it as support, trying all weekend price action, right? Fell back inside, back tested it. As soon as you back tested it here and rejected, you expected to take out this low. We did. We continued to grind down, overlap. That selling exhaustion was coming into Monday. And then Monday, we also have to remember, guys, these pumps that we saw on Monday was completely based off of a news tweet, a tweet that Trump did that maybe is not even true, right? But we started seeing a descending channel form, a 3-wave corrective move. And when we bounced from the value area high again, I expected to take out this high. We did just come take out that high. Now, and if you watch yesterday's video, I was saying there was a bullish possibility because we broke out of the channel, we back tested it, and we were grinding sideways during yesterday's stream right in here. So I said we might see another back test of it. If it holds, we could keep going up. But if I said yesterday, if you fall back inside this channel, you are likely to fall to the bottom of the channel. And that's what's happening. Now, what is going on? Are we seeing a pump? Yeah, we are. Okay, breaking market structure right now, guys. So this is our first bullish sign. We just saw a huge long position come in. But let's see if now that we take broken market structure here, let's see if we get a dump real quick. We just saw some pretty aggressive longs coming in here. Wow, a dump. Where is that? It could, yeah, this is interesting. Let's see what happens here. We are coming up to VWAP. Now this looks like the potential for a wave 4, right? Maybe our wave 5 is going to end here. But if we're going to get this, man, I don't like where it's ending, but this push up and break in market structure is a new development we have to pay attention to. So now on the low time frames, we're kind of looking for that 3-wave move. Man, it's going to be a shame if we front run this, but it might happen. I will go back to Ethereum. I just want to take a second here to look at Bitcoin. Let's pull a Fibonacci from the lows to that high we just made. And we're going to put on our golden pocket. So coming down to like 68.6, if you're very if you're open to that risk, you can try to long this, because now that we've broken market structure, you could look for a higher low before creating another higher high. But what I would be doing is the long would go here, your stop would go just below the low, and you would be targeting, I'd be looking now at pulling your wave 4 targets. If I can get to it. Where's that wick? There. To there. Okay, actually we're hitting the 382 right now. So very interesting. And generally in a wave 4, you're looking for a 3-wave corrective move. So some of the times what happens, guys, is you come up to the 382, you reject, you come down to the golden pocket, you hold it, and then you come up to the 0.5. That's your wave 4, and then you get your wave 5 down. So maybe we're going to see something like that. Another thing to remember, the 382 rejects you in strong trends. Now, we're talking about the intraday trend, the trend for today so far. Does this look like a strong trend to you? It does to me. A strong trend to the downside. So when you come to that 382, you will often reject from that 382, which rejects you in a strong trend, and then you could continue down. Let me get rid of this little guy. Yeah, overall, we did see that open interest dump pretty aggressively there, but now we're like this next 5-minute candle, we are seeing, I guess it's a little bit too early to tell because this looks like it could still be a little bit of longs coming in here. Crazy amounts of longs are opening in hyper liquid. Okay, maybe that's why we're seeing this push right now is hyper liquid. The 1 hour has bull divs on the RSI, but nothing on the 15 and the 4. The best trades for me have bull divs on all 3 time frames. Okay, awesome, Crypto Clown World. Yeah, I would be very surprised if we front run that daily level, or at least the Bybit POC, right? The Bybit POC, at least on USD, was just below us. Let me get that pulled back up. You can see that Bybit POC is just below us. Right around 68,000, 67,900-ish, 67,950. I think most of us don't know what confirmation to look for and what support levels are good. I'm one of those traders that's been getting chewed up. I take fibs and break of structures, but still roll over. Okay, Arthes Salvatore. What I would recommend for that is, first of all, the most key levels on the chart, in my opinion, are liquidity levels which are like swing lows and swing highs, and volume levels. So there's a couple ways to find volume levels. First of all, you can pull a fixed range volume profile. It's going to give you your value area high, your point of control, and your value area low. Another tool I would recommend you use, go into indicators in here and type in PVP, periodic volume profile, PVP. Okay, this periodic volume profile is going to give you this indicator here. You're going to go into settings, make sure you change your row size to 200. The default, I think, is 24. You want to change this to 200. You want to click extend your POC to the right. It's going to show you where your naked daily and naked monthly and naked weekly points of control are. And then now you can click here and you can look at your point of control. So like we can click our naked daily points of controls. We turn that on and it's going to give us a volume profile for each day. And it's going to show us, see all these points of controls for each day. But what we're looking for is the naked points of controls, the ones that haven't been touched yet. So you can see this day down here, we have a naked daily point of control at 63,575-ish, right? That's an important volume support level that is naked. Now, once it's touched, it's not near as important. And of course, today's, which is this one, you're seeing it extend because the daily hasn't confirmed. So you never actually want to add them to your chart until they're confirmed, till the daily candle close, in other words. But then you can look at your naked weekly points of controls. So volume levels are important to look at. Another volume tool you can use is an anchored VWAP, right? You threw the anchored VWAP on this swing high at $98,000. You come up to it. Let me just go on to the daily time frame here. What happens when you come up to your anchored VWAP? You get a little bit of a wick past it, but you reject from your anchored VWAP. It's a volume level. It's your trend volume resistance. Okay. What happened the last time we came up to our anchored VWAP? Now, on Bybit, it doesn't look like it, but on Coinbase, let me turn off those daily levels. On Coinbase, we had an anchored VWAP from the all-time high. Where did we reject? At the anchored VWAP, an important volume level. That was our 98K rejection. Here on this range, rejection straight from it, rejection straight from it. And this was a little bit of a failed auction range above it. But you're, once again, I said the Bybit one was like right there. So volume levels. Then, of course, Fibonacci's are great to use. I love Fibonacci's. I use them all the time. You can also mark out order blocks. And if you don't know what an order block is pretty much where, let me just show you an example of a really good order block that we just hit into and rejected from earlier last week. So when you're in a big downtrend, red candle, red candle, red candle, red candle, and then you have one green candle in there. The body of that green candle is called an order block. So in this case, in this downtrend we're seeing right here from 90,500 to 60,000, there's one important order block in there. It is the body of this green candle to the body of this green candle, this order block right here, right? On the daily time frame. Now, I think the 8-hour order block is what we rejected from. An 8-hour, by the way, guys, a secret, 8-hour order blocks work really great. Really, really great. But that's an order block. So mark out key important order blocks. The thing with order blocks is another secret. The order block that you see that has an imbalanced candle after it is the best order blocks. On the lower time frames, let me see if I can find one of those. Let's go to the 1 hour or 2 hour time frames. To look on too. 2 and 4 hours are pretty good to look on. We need to look at an aggressive dump here. Yeah, I mean, I guess you could even say this one a little bit. You had your 4-hour order block in here and then followed by a big imbalance candle to the downside. What happens? You retrace to fill that 4-hour order block and then you dump. Another thing to look at is in my trading personally at pitchforks and channels. But you just come up with a strategy where you can find the most confluence of support. So like locally today, I was looking for Confluence before the live stream, and I'm like, okay, we're dumping throughout the entire day today. We lost the low here. We didn't hold it. We didn't hold the 70K golden pocket naked daily point of control overnight. Where's the next logical level where we have some sort of support? Well, we have a daily level at 67,850. Oh, wait, we also have our 2.618 Fibonacci extinction close by, and we have our 886 Fibonacci, which bounces you in sideways ranges. And over the past 2 weeks, this is a pretty damn sideways range. But I think also looking for confirmation, man. Like if you don't, first of all, this is a good time to talk about NAMI. NAMI is one of the tools that I use for confirmation. So as we're coming down to my support box, I want to see bull divs on the chart, and if possible, money flow bull divs, or at least money flow curving to the upside. In this case, if I'm looking for a long. So speaking of that, let me take a second to shout out the partners of the channel. The main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees. You do have to deposit some pretty large amounts into the exchange to get the 40% discounts. But they're also offering up to $8,100 in futures trading bonuses. And guys, what we're doing is we're trading USDT contracts on the futures markets. So you're already trading those futures markets, so you can earn extra bonuses paid in real Bitcoin or real USDT just based off the trading you're already doing on the exchange, up to $8,100 worth. So really good incentive there. They're also offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit $100, you can get a 50% deposit bonus. Most exchanges will give you a 20% deposit bonus for this. BYDFI is giving you a 50. They're giving you a 20% deposit bonus up to $1,000 deposit, and a 10% deposit bonus up to $20,000, guys. That's huge. So if you're interested, I recommend you take advantage of these. Use the affiliate link in the description. You guys can get those discounts. You can get those trading fees, discounts and trading fees, and those incentives there. I've also partnered with BYDFI to create the Telegram community. What I've been talking about all day in the live stream and in every video. That Telegram community is a private community, but it is free. All you need to do to get into that Telegram is join BYDFI using my affiliate link and deposit a minimum deposit of $100 or more. So once you've done that, once you've joined and deposited at least $100 or more, you can deposit more if you want some of these bigger bonuses. Click the Telegram link in the description of this video. And in that Telegram verify channel, you're going to type in /verify and then your BYDFI user ID, which is probably going to be a string of letters and numbers, but it's going to be next to your little character guy. But /verify in your user ID. And then once you type that into the Telegram, it will automatically transfer you into the main Telegram group. And once you're in, you're in. So remember, /verify user ID after depositing your minimum deposit using the affiliate link. The second partner of the channel is Blowfin. It's the second non-KYC exchange I partnered with. I have 2 KYC exchanges, 2 non-KYC. So Blowfin is the second partner of the channel that's non-KYC. They're doing, for the first 300 users, if you deposit just $5, you can get a $10 voucher, VIP 1 for 30 days. And then here's that 20% deposit bonus on $100, various deposit bonuses here. And then on if you deposit $10,000, you can get a $1,000 future bonus. So 10% deposit bonus. And then the 2 KYC exchanges are MEXC and Bybit, both great exchanges. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC's offering a 10% initial deposit bonus up to $1,000, and they are offering some small discounts on the trading fees as well. Then lastly, it is NAMI. NAMI is this momentum and money flow indicator down here. So I use it for all my confirmations on my trades. as we are coming down to key levels or coming up to key resistances, I am looking for confirmations to enter the shorts or enter the longs. I'm not just entering blindly because we're hitting the level. I want to see my confirmations, and I use NAMI and Market Cipher for those confirmations. I'm looking for bull divs. I'm looking for money flow bull divs if possible, or at least money flow to start curving to the upside. If you're interested in purchasing NAMI, it's tremendously helped me in staying out of the bad trades that don't have proper confirmation and getting into the more probable trades to play out that do have proper confirmation. It's paid for itself, honestly, like almost immediately, right? A couple win trades, you pay for yourself, you know. I've partnered with NAMI to get you guys 50% off. So if you do want to purchase NAMI, click the affiliate link in the description below. And then when you're checking out, use discount code DIVINE50 in the discount code box, the promotion box, and you can get 50% off NAMI. All right, let's get back to the TA here. Let me see what's happening on Bitcoin. We are starting to reject from that 382 Fibonacci and from our anchored or from our daily VWAP, our session VWAP. Now remember, in a bearish trend, guys, we've been away from the VWAP for most of the day. In a bearish trend, you will often work your way up to the VWAP, and if you reject from that VWAP, you expect the bearish trend to continue. Pretty much expect to come take out your local low. So let's see if we start to get a real rejection here, or if we're just going to consolidate and then break up above it. And then once again, because we broke market structure by breaking this high, in a bullish scenario, you could look for the long here. We would have to look on like the 1 minute for bull divs as we're grinding down here. If we're seeing 1 minute bull divs, you could look for it. I personally probably won't take that, guys. I do think we're going to get a move down to the daily level. So I'm probably, we'll see. We'll see if we get down there. Once we get down there, we'll see. But yeah. All right. Dude, if BTC just dropped further down so we can afford buying a new GPU, yeah, that would be nice, huh? I mean, I think Bitcoin is going to drop. I'm not saying today, tomorrow. I think Bitcoin is going to take out those macro 60K lows. We are in a bear market. We just got to be patient and wait for it to happen. But also, guys, the economy is kind of so overstressed. And then also what's going on geopolitically and with oil around the world now, risk on assets could see a big falling out, especially if the Fed starts increasing rates again, which they're now talking about. Wow, I am pretty far behind in the chat. Let me just look at the chat real quick here, guys. Wow. Okay. I'm sorry. I am way far back. I'm going to skip some of the chat and then scroll to the bottom, and I'll try to work my way up. There was something with contract at 75K. 75K with a contract, not sure what 74.2 was a naked weekly point of control and a 786, but yeah. CJ, welcome in, my friend. Your TA would really help right now. Can you do TA on 73K levels if it's going 73K first or 57K? I actually covered this a lot in the live stream, CJ. I do think we are going to drop to 57K. Now, could we come up to 73? 73 is not much higher than we were yesterday. Could we be seeing some sort, let's see, how could we make a count for this? Like, I mean, this looks like a WXY. The thing is, CJ, because this was impulsive down, we were more likely to make a lower high before seeing now another lower low come in. I personally thought this move up that we've seen from Sunday, from last weekend's lows, was going to bring us up there. Unfortunately, it didn't. Now that we're breaking down pretty aggressively, it is more likely that we do come down. Now, after bouncing from 66,000, we could get a move up to, I don't think we'd even get up to 73, you know, because we'd be looking to pull it from this high to wherever this low is, and you'd be looking golden pocket 786. So personally, I think we're gonna continue lower, but when I long this 66K, if and when I long this, I will hold some open. Of course, I'm going to take like probably 75% at the golden pocket 786 area, but I'll leave 25% open just in case we do see a bullish scenario play out. And I can always add to it and compound it. Bitcoin is approaching one of the largest options expiry events of 2026 on Friday, March 27th. Okay, wow. 14.16 billion worth of Bitcoin options. Oh, wow. Okay, well, thank you for that, Nightwalker. That's actually very important news, and I appreciate you sharing that with us. Thank you, thank you. Okay, R Pink, thank you so much for posting all the affiliate links in the description. You are the best as always. Thank you for that, brother. That low was a previous month point of control. Okay, just now, like at 68.2, previous month point of control. Okay, interesting. Imagine we get all the futures tweets of Trump's. Yeah, no joke. Ryzen, if we could get all of Trump's tweets that he was going to post in the future, we could pretty much long and short off some of those tweets. Not all of them, but some of them. Okay, let's see here. Yeah, under 69K, targeting 65K. Yeah, me too. 60, well, close, 66 to 65.6 is where I'm targeting for this being a wave 1 to the downside. And then I'm expecting a wave 2 and then a big wave 3 to take out 60K lows. Those longs, yeah, Hyperliquid new. Dividend bears got to trap some. So those longs, but now we have a bunch of longs stepping in. So if we fail here, it's going to be more fuel to continue bringing us down. Let's check our order flow now that we have some. Yeah, it does look like some. Well, interestingly enough, we did see some fresh shorts coming in here. You can see your CVD was dropping a little bit here, and your open interest was rising. So we are seeing some shorts come in here, but that in some ways could be a bad thing because, and actually it looks like some of those shorts are already closing out, which is why your CVD is going up here. This looks like a 1 minute bullish triangle to me, right? Like a little 1 minute bull flag type of thing we're seeing here. Yeah, something like that, Okay, 68K to maybe. Yeah, 68K could be a scalp long opportunity. Cambo Hank, I'm looking at 68K as a scalp long opportunity. But to take profit around 69,250 to about 69.6. Bounce from the local 786, but didn't flash the divergence I usually look for. Okay, yep, I think I know what you're talking about there. Big deals, well. Welcome in, man. Welcome in. Oil is dumping. Gold pumping also. Guys, I'm in a nice long on gold. Last weekend, gosh, I got in so nicely on gold and silver. Last weekend, I let you guys know as soon as we came down to our pitchfork midline here. Let me go here. Let me turn off our volume real quick. First of all, we were expecting this dump. But here's the thing, guys. Dump here, corrective move, and then this looks like an impulse, right? Wave 1, corrective move in a wave 2. Wave 3, corrective move in a 4. Do we need another new low? And coming down to about $4,000 would be nice to see that $4,000 support. But we're pretty much, I longed As soon as we hit this, drop below it and reclaimed, I think I was like at close 41.60 something. I think I longed. And I did take some profit at 45.34. I took out half of the position. What am I doing? Let me just do this. But the fact that we're rejecting the 382 to the 0.5 Fibonacci here is kind of bad. Because look at, you did see a 3-wave move up to it. So this could start turning into a 1, 2, 3, 4, 5, something like that, where you do make another new local low to finish this move down. Gold overall, man, look at this. You reject the top of the pitchfork band, lower high, back test the bottom of it, drop to the midline. If you guys go watch my videos from about, what was this? When was this? Beginning of February, I was talking about 4,100 to 4,000 being the support where I would buy spot and potentially look for a long. What I will say on this looking pretty corrective, and then you could come up for new all-time highs. Let's pull our trend-based Fibonacci extinction for this. Yeah, so that's why we were looking at these two boxes, right? Your 1-to-1 Fibonacci was at 42.61. Your 1.236 is right around $4,000. And then if you look at your golden pocket, 786. And because this move is more than a 100% move, you have to make sure that's on log scale. Wait, what am I doing? Let me make that golden pocket 786. And then you put that. So you now can see where I'm getting my boxes from. 786, 1-to-1 was this box. Now this box was the pitchfork midline. I believe there's a daily level down there. Let's see, where was it? Well, there's some liquidity down here. Yeah, maybe it was a weekly level. But either way, strong bounce from here. But since we are rejecting that 382, you could make another new low, coming down to around 4,000. Or I wouldn't even be surprised if we swept this in here. So come down to 38.86-ish. Silver, I'm still looking for silver to come down to $58, but I did long it on that same day that I long gold, pretty much from, I think I was even below this low. Or as soon as we started reclaiming that low, I longed it. I can let you guys know my level. And I longed it on Blowfin, guys. Blowfin, you can trade silver on Blowfin and gold. And also MEXC has silver and gold. And BYDFI has gold right now, and silver will be coming very, very shortly. I longed it at 63.94. So 63.94, pretty much right around that low. I've already taken 50% out on that. I'm still in it. Let me get rid of some of this stuff in here. Yeah, that was our level, really. $64, if you guys remember. It was your 0.618, which is your minimum target for the ABC. 1-to-1 to the 1.236 is your kind of main targets. But it was also our 1.618 Fibonacci extinction. If we're looking at this, and this looks actually really nice now, guys. Let me show you this. So you had your big dump down. You had a 3-wave corrective move to reject from your golden pocket. And then we have this 1, 2, and look at your 2. It's a nice 3-wave corrective move and a 2. 3 to come down to the 1.618 or lower. Your 4, what does your 4 do? 3-wave corrective move. And now we're looking for a 5. So coming down to 58 would suffice. I mean, $58, guys. I'm telling you right now, I have alerts set there. I am telling you right now, at $58, you could get a really nice swing long opportunity on silver. And I will let you guys know if I take that in the Telegram. $58, a daily level, a naked monthly point of control, a naked weekly point of control, and it's your 382 Fibonacci. Remember, we're looking at the Elliott impulse from $12. Wave 1, wave 2, wave 3 came right up to your 2-to-1 Fibonacci extinction. And now we're looking for a corrective move to come to the 382 to the 0.5 Fibonacci. And they are, wait, let's see here. What did I do here? Here to here. Yeah, there you go. $58. And then, of course, 46 is your 0.5. Just a lot of really nice confirmation there. And that $58 could bring you in a wave 5 to new all-time highs. Yeah, guys, please hit the like button if you got any sort of insight into the market from this live stream. Let's see here. Let me go back to Bitcoin really quickly, and I will actually let me check Bitcoin for 1 minute, and then we'll go back to ETH. I mean, it's trying to hold, guys. It's trying to hold right now. We're getting that little bit of consolidation within that triangle. Doesn't look too bad to me, but it is starting to break that little trend line. We're seeing a fake out of it. Let's see if we get some sort of resolution here. I mean, you do have some pretty bad bear divs on the 1 minute. Higher high, higher high, higher high, lower highs in all of this. Money flow now crossing into the red again on the 1 minute. Sudeep, welcome in. So good to see you in here as always. Celinda Anderson, I'm a buyer sub 40K. Man, I'm a buyer. As soon as we hit 58K, I start to buy a little bit. If we break 49K, those lows, those 2024 range lows at 49K, I'll buy more. But where you leverage, in my opinion, where I leverage the house to buy Bitcoin is at like 34 to 32K. All right. Oh, can I explain when I say it's more than a 100% move? Yes. So like, let me go back to silver, or actually we can stick on Bitcoin, right? If you're looking at key swing highs and swing lows, let's do silver, because silver is a really good example of that. Because silver in like a few months shot from, what was it? Like earlier here in October, silver was at $46, and by January, for like 2 months, 3 months, it went up. So you want to look at this. You pull your measurement tool from this low to this high. It is a 167% move, right? So now here's the thing. If it's more than a 100% move to the upside, and you are using the logarithmic chart, which you should be on high volatility moves like this, you should be using the logarithmic chart. If it's more than a 100% move to the upside, when you pull your Fibonacci from that swing low to that high, you want to, and let me get to a different silver chart, just to clear up the chart. From that swing low to that swing high, if you put on your non-log golden pocket, remember, a golden pocket is supposed to be a 61.8% retracement, right? So it's supposed to be a 61-point retracement down. It's supposed to be 61% down and 40% to the upside until you get to that 618. But you can see right now here on this, it's not the proper 61.8% retracement, which is an important psychological level. So from here to the 618, and then if we go from the bottom to the 618, this should be shorter than this. Look at, they're about equal, or even this one's even a little bit longer than this one. So to get your proper 61.8% retracement, click on that fib, go into settings, click fibs based off log scale, and look at what happens. It shifts it down to the proper 61.8% retracement level. Okay. Now you see why this low was so important, and you got a strong bounce from that low because it was your first golden pocket hit on the dump. We came down to it again. We wicked past it to grab liquidity, but the golden pocket is still holding. Okay. Now, in the same respects, on dumps to the downside, if you have more than a 30% dump to the downside, that is when you need to shift your Fibonacci to based off log scale. You come in, you hit based off log scale, right? Okay, so that is a little secret that not a lot of people know about. Not a lot of people even use the logarithmic chart, which you should be on very high volatility swings. You should be using that log chart and your log Fibonacci settings. You should also be using those log Fibonacci settings on your trend-based Fibonacci extinction. Okay. Yes, making bear flag, 3-day death cross, dump into the abyss. Tiki Taku, welcome in. It's been a while. Also, Andrew, welcome in as well. It's so good to see you guys in here. Tiki Taku, I kind of agree. I think we could be about to dump soon, like pretty hard. Yep, pretty hard. Based off Elliott waves, not the death cross, not the bear flag necessarily, but based off Elliott waves. But yes, I have to agree with you. So different strategies to come up with the same scenario, but we both kind of have that same scenario. If this is a one-to-one correction, then the ABC is around 52K. All right, let me see what you mean. I think you're talking about the bigger potential for a WXY correction. What you mean by that? Would you be meaning like this being your A or a W, this being your X or a B, and this being your C wave? Or are you talking about kind of this here? So what I've been looking at on that, by the way, is the bigger WXY correction, okay? But here's the thing. In your W, you have that nice 3-wave move. Here, here, and here, right? And this was like a triangle forming in here, or like a ascending triangle. In the X wave, you have a really nice 3-wave move. In your Y wave, we saw one aggressive move down. This could be your move up as the secondary move in your Y wave, and then one more move down to take out 60K would be that 3-wave move to end Y. So yes, if we're looking at your one-to-one fib of this Y wave, this here, we're looking at, let's grab that trend-based Fibonacci extinction. Now, based off log scale, it's coming in at 46. Let me check this on non-log scale. No, you must be looking at a different Fibonacci extinction than I am there. 52. So you might have to point out to me what Fibonacci extinction you're using, because you can see here the 1-to-1. That's where we bounce from, like pretty much. If you pull it from here to here to here, 1-to-1, 1.236. Can we look at Caspa? Yeah, we can check Caspa out real quick. Oh, wait, let me check Ethereum first. I didn't finish checking Ethereum. So guys, Ethereum, bottom line is Ethereum's dumping back inside the volume profile. We are bouncing from the bottom of that channel. Let me get in here for you guys. So we're bouncing from the bottom of the channel. This was the channel that we were starting to form that corrective channel in here. You had a fake out just to grab liquidity. Then you fall back inside. So we're bouncing from the bottom, but I really would at this point now be looking for Ethereum to come take out the lows at the very least. And you can see we have some of these lows here. This liquidity trail coming down to the bottom of the pitchfork band, because the bottom of the pitchfork band was front run here. It was a golden pocket. That's why. If we pull a golden pocket from this low to this high, I believe it was, or was it the range? Yeah. This is one of the golden pockets I'm looking at $2,000 coming down, grabbing liquidity. Now, let me double check, because I think okay, you see how this is only a 32% move to the upside? So that is not, if that's on log scale, which I think it is, yeah. That's not the proper gold. That's the one that we hit the other day. We bounced from that golden pocket on Sunday. You got your move up. But to look at the main golden pocket pulled from the range low to the range high, that golden pocket is coming in around 1988 to 1968, let's say 1968 to 1988, and our range point of control is in there. You would also sweep all of this liquidity that kind of was stuck in here. You've swept most of it with this low, but not all of it. So I'm looking at a couple levels on Ethereum. First off, the bottom of the pitchfork band, you usually will get some sort of reaction. So I am watching the bottom of the pitchfork band around $2,000 or $2,010. So in other words, looking for an SFP of the Monday lows into the bottom of the pitchfork band might be a nice little scalp long position. Boom, get back above it. You might be able to see a long from there. But overall, because this looked impulsive and we put in a 3-wave corrective move, we could dump hard here. You could extend this correction. You could say that this is all an X here. Excuse me, a W there. You could get some sort of X in here, and then you could get a Y in here, extending this sideways range before seeing the big dump come in. But, you know, just pay attention to those key levels, right? Liquidity, golden pocket at the point of control down below. If we look at our naked weekly points of control and naked daily points of control within this range, no naked dailies until we get down to pretty much 1900. No naked weeklies until we get down there as well. I thought, yeah, we do have a weekly level. At like 1937. And then the daily level that was coming in there as well. And let's pull our trend-based Fibonacci extinction. And I want to look at that 1.618 Fibonacci extinction because, and the reason why I'm trying to look at the 1.618, because we're looking for wave 1, wave 2. We could see a big wave 3 come in here before seeing a wave 4 and then a wave 5. But guys, around the pitchfork lows is where I'm looking. You can see heavy spot buys, right? In this general area. And the reason why is it's the bottom of our pitchfork. Yes, it's rising a little bit now above that, but it's also our 4-year long range point of control. Zoom out to the daily time frame. We did reject the top of the pitchfork band, bounced from the upper band, lost it, back tested it, bounced from the midline, lost it. We're chopping around in the lower band right now. If you lose this lower band, you expect to come down to the bottom. And at the bottom, if we look at our 4-year long range, this entire upper range for Ethereum that's lasted 4 years, look at where your point of control is at, pretty much at the bottom of the pitchfork. Okay, and then we have another range to look at. This upper range. Taking out the low at the value area low would be nice to see. Okay, hold on. Bitcoin's breaking down. Is that what that's saying? Guys, I see the thing is, I know we did get that break in market structure just now. So that's our first at least little sign of strength. But we're rejecting from the 382. Okay? And we bounced before actually hitting our support zone. Whether you're looking at Bybit or Coinbase, the support zone is at like 68 to 67, 850-ish. But you could look at this golden pocket now. Let's see if we get a bounce from this golden pocket. Let's see if we have some bull divs coming into this golden pocket. We'd have to look on the 1-minute time frame. We were seeing the 1-minute bear divs I just pointed out to you guys. As we were rising in here, 1-minute bear divs, money flow leaving out of the asset. Bear divs, money flow bear divs. So the big, very local support would be that golden pocket. It's really a golden pocket 786. So both of them, you know. But I would like to come down to 67, 850. If it's okay, wait. So, let's see. If this is an ABC correction, then okay, yep. No, that wasn't log scale. Okay, if it's log scale, then we already hit the 1-to-1. Yes. Okay, I think I know exactly what you're talking about. The 1-to-1 Fibonacci extinction that we hit on that dump. And that's exactly where we ended our daily candle. So look at this, Coach Gimmeries. Yeah, look at where your daily candle ended on that dump. Right at the 1-to-1. Yes, you did wick past it, but then you came back down to the bottom, back tested it a second time and held it. So yes. But the 1.236 is also going to be a pretty key, you know, important area. And yes, we are below the Coinbase PLC. I do follow the Coinbase PLC more than I do follow the Bybit PLC. Coinbase POC of the range. Hold on, let me clean this up. Coinbase POC of the range, I believe, was at 69,000. Actually, you're pretty much at it right now. You're back testing it bearishly right now. Yeah, pretty much 69,000, 68.9. Are there bear divs on Bitcoin on monthly Yes, there are. So, Michael, that is why I'm saying I do think that we're going to see sub 60,000 before we come up to like 80. You know, a lot of people think we're going to shoot up to $86,000 in the next month or two, including some highly respected traders that I highly respect their opinion. You know, Jason Casper thinks there's a possibility we could come up to 85,000 before taking out $60,000 lows. Personally, I don't think that's the case. I think that this entire range for the past six or 7 weeks looks like a corrective range. And I do think because we're starting an impulse down, we are likely to take out those lows. The bear market, the monthly divs that we're seeing on the bear market, and let me go to the index chart. The monthly bear divs that we're seeing are so aggressive too. So from the 2017 all-time high to your 2021 all-time high or 2020 all-time high to this cycle's all-time high, you see very aggressive bear divs on the monthly, money flow bear divs on the monthly. But the big thing is, say you don't want to zoom out that far. Let's just look from our last bull market to this bull market top, all-time high. You see bear divs there. But okay, you're going to say, wait, that was the last cycle, Divine Hood. I don't want to look at the last cycle. Okay, let's look at this cycle. From your 2024 all-time high to your January 2025 to your October all-time high. You do have bear divs on the chart. You do have bear divs on the chart on the monthly time frame. You have money flow bear divs on the chart on the monthly time frame. Going into the weekly chart. On the weekly chart, oh my goodness, look how crappy these bear divs look in our bull market this time around. 2024 all-time high. 2025 beginning. 2025 end. You have extreme bear divs here. Money flow draining out as that is forming, just crossing into the red. And even on NAMI, which is much quicker to confirm momentum waves, look at the momentum waves up at the top up here on the weekly time frame. High, 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 bear, 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 followed by the hidden bear div at 98K on the weekly. Hidden bear div at 98K. Hidden bear div is a continuation pattern. That means you're going to continue the downtrend. Now, the one thing that we're seeing on NAMI that was also on Market Cipher B that's giving me some slight hope that we might come up to 78 or 85 is you are seeing the green dot, the second green dot on Market Cipher on the weekly. And historically, these green dots have given us 6 or 7 weeks of sideways and up. The last time we saw the green dot, 6 or 7 weeks of sideways and up, right? On Market Cipher, and you have two close together, which is pretty rare. But on NAMI, you are confirming bull divs on the weekly between this low and this low. I still don't think it is. Now, I want to see, because we saw at the top, the 3 drives of bear div, followed by the hidden bear div. If we make another hidden bear div, man, let's watch the cascade of pain. It means it's going to 0. Yes. Oh my gosh, guys, I just checked the time. I do got to get going too, because I got to go pick up the kiddo. So you guys know what I'm looking for. Covered the, look at the beginning of the stream. And shit, I forgot to look at Caspa. Let me check Caspa out 1 second here. Caspa USDT. I think this is the chart I follow. Oops, that's not Caspa. Yeah, okay, so Caspa is rejecting. We were looking at a channel. First of all, you're hitting into that 1-to-1 Fibonacci extinction, but we did have, and I know this looks, we had a channel in here based off of these highs. We broke it down. We back tested it. We made new lows. After taking out the lows, you came up to back test it again, and you're rejecting now on the back test. So you do expect to come take out those lows. In other words, you're expecting to come take out these range lows in here. And it's more of a double bottom also in here. So it would be really nice to come down and take out those lows. Also, you are rejecting from the 1-to-1 trend-based Fibonacci extinction. If we're looking at this as a 3-wave corrective move, you're rejecting from that 1-to-1 and between the 1-to-1 and the 1.236. What I would be watching is watching this little range that's forming up here. Okay, you're trying to break the value area low to the downside today. So if you close your daily candle below that value area low at 0.36, you're very likely to come take out your range lows. Now you are hitting your golden pocket probably. Let's see that. Yeah, golden pocket was at the bottom, the value area low, but unfortunately you're breaking that golden pocket. You are trying to bounce from the 786. Yeah, you do have a daily just below you as well. Keep an eye out for that daily level. But it doesn't look too good. Like, look at this big bearish engulfing candle on the day for this. If it closes this bearish, it's going to be a bearish engulfing all of yesterday's bullish candle. So I would be very cautious here of seeing this dump continue. And it does look like in some ways that this is a 1, 2, all of this is a 3, and the 3 might continue a little bit further. You could fill in this imbalance into your daily level at 35 cents pretty much, or 34.96. And then see a small bounce from there, maybe to backtest your POC before taking out the range lows. So you're looking for a 1, 2, 3, 4, 5. But I would look at taking out these pretty much this double bottom here. In a really bearish scenario, you're going to go a lot deeper than that. I mean, this looks absolutely disgusting here. This looks like a 3-wave move. Here with that wick, it looks like a 3-wave move. And then this looks like a 3-wave move. This could be some sort of leading diagonal that broke out at the end. 1, 2, 3, 4, 5 motive wave, but I don't like that. I would think that, and you are rejecting on a lower high here, so it is more likely that you make a lower low. Money flow crossing into the red on NAMI, market cipher, excuse me, already in the red on NAMI. Let's go to the 4-hour. Yeah, 4-hour about to cross into the red. NAMI just crossed into the red. And then the 8-hour. Not too bad looking, to be honest. What's important to understand on Caspa is whether you close the daily candle above or below this value area low at 36 cents. Now, look at, on the 1 hour, we've lost it. We're back testing it right now. Depending on what happens in this back test, if you reject right now, you expect to at least take out your local low, meaning you're probably going to hit that daily level. You might get a double bottom and a bounce from that daily level at 35 cents, but yeah. I would honestly be looking at these range lows here. Coin operated. I would really, because look at, this is more, yes, technically it's a technical SFP. I guess that's a decent wick below it. Yeah, decent SFP there. But I would still look at coming down, because here's the thing with a range. Anytime you have a range, you're looking at liquidity and volume, right? We rejected from the value area high. We dropped to the POC. We tried to bounce. We lost it. Now we're losing the value area low. If you lose the value area low and you start to close daily candles outside of the value area low, now you're looking to come grab the range lows, the liquidity from the range lows. It doesn't mean that you can't see another local low here and a bounce to come back up and back test it again before dropping. But if you close your daily candle below 36, it doesn't have to happen immediately, but you're likely to come look at the range lows to see if you can get that SFP of the range lows. Okay, guys, I will be live tomorrow at 2 p.m. Eastern Standard, 3 p.m. Eastern Standard Time. Come join me, please, tomorrow. I'll keep you updated in the Telegram. Bitcoin is seeing a small bounce right now. I'm not interested. What's happening here? Let me go back to the 5-minute chart here on Bitcoin. If you do come down to 68,600, let's say, where that golden pocket is, you might be able to look for a long because we did break market structure on the 1-minute time frame and the 5-minute time frame bullishly. But I would rather see that 67,850 mark, where that daily level is at 67,850 to around 68K, where the POC on coin Bybit is. Chicken Salt, welcome in, my man. Unfortunately, I've been streaming for a little bit over 2 hours, and I do got to get going right now. But please come try to catch me all tomorrow, guys. Please hit the like button on your way out. Appreciate all your kindness and support.